Chris, we are live.
Hi,
Thanks for.
Jonathan. Good to be back.
Yeah. I'm going to see a lot more of you these days as well. By
Yeah.
the looks of it, Chris, which is great. Obviously, anyone who doesn't know Chris Tubby, Chris is a veteran in the industry. You've been trading for over 50 years. Back when chalkboards were a thing, imagine that. Now, throughout your journey, you've learned pretty much every asset class. You mastered every kind of types of techniques and so on along the way. So it's going to be invaluable to really get your insights in the markets. Today, we're just going to obviously go through some pre-fed stuff, but before we do that, just to let you guys know that, look, we're in the app. Anyone that joins the app at app.2blokestrading.com, you can download it on iOS or Android. Chris will be in the app from now on, sharing his analysis. You can talk to myself and Chris, share your ideas. We'll give you some support along the way. And we'll also be offering some mentorship and other bits and pieces as well. So the key thing for anyone who knows me is certainly we want to try and help traders. Key is to educate traders, give them the right path, and really just set the foundation for successful trading into the future. And that really starts with getting the right education, getting the right types of mentorships, and keeping yourself on track, having the right support as well, which is absolutely key. And Chris is going to be a huge part of that. So I'm delighted to welcome you officially, Chris, as well.
Thank you, Jonathan. And that's really what brought us together, wasn't it? After our previous conversations and all that on about how we want to help other traders, and that's sort of like one of our passions, and hope, not hopefully, but we're going to bring that through in all different ways, shapes and forms, obviously with the app and with education and however else we can do this to help the guys.
100%. And I think what keeps pushing me on is all the bullshit out there. It's all these kind of gimmicks and get rich quick schemes that just drives me demented. And it's what gets me up in the morning. It gets me running the podcast every week. Everything is trying to actually build something that's tangible for traders to get value from. And like I said, having people like yourself coming in and being able to share your experiences is absolutely invaluable. So I really look forward to, I suppose, teaming up and also learning from you as well. I've been doing this for 15 years now. You've been doing it for 50 years. I can certainly learn a hell of a lot from you as well. So I'm kind of excited about that.
Well, I'm sure I learned stuff from you as well. I mean, even through all my courses that I do, and that is the great thing is I get to meet so many wonderful people, but also I learn stuff from them as well. Yeah. So it's a two-way street for sure.
Sometimes the best part of learning or teaching people is you kind of bring that to the forefront of your brain again, stuff that you kind of forget. You can sit there, a lot of traders will sit there trading away and they almost forget a lot of their own processes and, things that really are important, but because it's almost like this, we get up, we look at the screens, we trade, and it's like almost robotic that we almost forget all the principles that really make the difference. And I think sometimes where, even when you are a good trader, it can slip unless you're kind of talking to people. Trading in the dark is never going to work. But look, let's jump into this webinar because obviously we are a short way away from the Fed meeting, and that's what we're here to talk about for sure. And before I do that, I just want to thank our partner broker Forex.com, who's sponsoring our webinar. Please remember, everything we discussed today is educational purposes only and should not be taken as financial advice. See, trading carries risk and it should never trade with money that you cannot afford to lose, which is obviously key. Fed meeting, let's go. Lots to talk about. I suppose first and foremost, we kind of know that we're going to see a 25 basis point cut, right? So that's kind of priced into the markets at the moment. We're not going to get any shock today, are we?
No, I mean, the thing is that there are people talking about 50, and even Trump is sort of been saying, be ready for big cuts and all that. But he hasn't got enough influence over the Fed yet. He's been, even over the last couple of days, he's been trying to force cookout with various sort of judges and all that to remove her so he can replace her and perhaps again get that extra vote that he may need to get that and the Treasury to borrow.
Right? Yeah, and exports as well, surely. He wants to create that industry back into America, and that's key for him. And obviously a cheaper dollar will benefit that, right?
Yeah, and it's one thing that he's certainly not fought against is getting a cheaper dollar, but when you're Treasury is spending, and effectively the government is spending as much on financing their debt as they are on defence. Think about it, it's America, it's not a small country.
Yeah.
That's where his problem lies. And that's, for him, he wants rates cut in half, basically. Now, he
Yeah.
may not get that, well, he won't get that this year, but he may get it by the end of next year, because obviously he's trying to gain more and more control over the Fed. And then, that then becomes a bit of an issue, because, the central banks are generally supposed to be independent. And yet here we are talking about a president having the overall influence over the central bank. And
Yeah.
if that happens, and it sort of becomes a bit politicized, then you could get to the point where you could see a severe weakening of the dollar.
Yeah.
There's a lot of institutions now talking about whether they're overweight or not in stocks in the US.
Hmm. Absolutely, we'll definitely push on to some of that for sure. There's no doubt about it. We'll actually cover some markets later in the webinar. But I mean, I suppose key drivers really are weaker job reports. You know, inflation. You know, it's moderating, but it's obviously still sticky. You know, what are the key factors around what will happen if they were to cut more than the 25 basis point?
I don't think they can cut more than 25 tomorrow. And the reason for that is because that would almost be Powell admitting that Trump was right about wanting these rate cuts at the last meeting and that.
Mm-hmm.
So I don't really see that. And as you mentioned quite rightly, inflation, and that is the sticking point, because the Fed's got to sort of weigh up whether they are more focused and more concerned about inflation creeping back up. I call it Trumpflation because he's causing a lot of this, or whether the weakness of the jobs market and the general weakness of consumer confidence in the American economy as well is going to be the priority.
Sure. I mean, like, they can't risk like any further inflation. I mean, people are at their wits' end in America at the moment. I mean, it's that divide is getting bigger and bigger. I mean, can people afford any further inflation? And that's the key, right? There's a real balancing act at the moment in the US, but it seems to be a complete shit show, for want of a better word. I mean, I just don't see any real get out of jail card here for anybody. I just, whatever path they take seems to be, there's going to be, a chopping block on either side. Do you know, that kind of way? There's going to be inherent kind of continued issues regardless of what they do. It's a balancing act, right? And that's the key. We've got obviously a Fed that are trying to balance that act. They've got outside pressures from, like you say, from Trump, but we've got some of the biggest analysts in the world that are saying within 3 years we're going to have a massive bang. We've got hedge fund guys pulling out of US stocks, even though US stocks are at all-time highs. Where do we even start to consider or think about what's going on in the markets when really nobody knows what the short-term, let alone long-term future holds for us at the moment?
I think another problem there is sort of, when we talk about the unemployment, we talk about data in general. I was actually talking about this in my class today, is that this data, how trustworthy is it? How much can we rely on this data these days? I mean, when you look, Trump fired the head of the BLS, the statistics, quite rightly, because when we start to look at sort of the job situation, recently, they'd overstated jobs by about 900,000, I think it was. And if you took May 23 to May 24, that was another 818,000. So that's like 1.7 million jobs that's been overstated in a couple of years, which is a concern. Another concern is something that I've been sort of very vocal about for over a year or so, is how reliable are these surveys? 5,000 companies or 5,000 households are surveyed. And we take this data and we treat it as if it's not so much just genuine, but that it represents maybe the whole country, when it probably doesn't. Okay, so it's only 5,000 to start with, but within that 5,000, the responses sometimes just over 30-40%. And then the
Sure.
big question is, who fills in those surveys?
Mm-hmm. Yeah, well, look, I mean, since day one, there's been a question marks about everything. It's very hard to believe any information or data that's out there at the moment when it's controlled data, and that's the problem. When you get independent data, you have a half a chance, but yeah, who knows? And I think that's a hole that we don't need to go into right now, because that could lead us down a different
Oh
path.
yeah, yeah. I mean, some institutions are starting to create their own data now, rather than rely on it. But
Yeah,
we still
that's
need
incredible.
that data because we need that insight. Uh,
Sure.
and we're going to use that now. Something that I've always been saying for a long time with the jobs is, we looked at it, and the unemployment rate was down at 4.1%. Again, was it realistic? 4.3 where it is now is probably even a little bit generous. So I still
Mm-hmm.
think it's going to go up 4.5, 4.6. But let's be honest. Anything less than 5% unemployment is still great.
Yeah.
There's
Yeah.
always those people that can't work or don't want to work involved in that
Mm-hmm.
as well.
Absolutely.
But where I've sort of focused on a lot is you've seen this decline in permanent jobs in the US, and they've been replaced by obviously the part-time workers,
Yeah.
and obviously they're on a much lower salary, and
Yeah.
then why the unemployment pictures always look so strong, I think over the last year especially, is a lot of these guys on the lower incomes are having to take 2, sometimes 3 jobs to
Yeah.
be able to pay the bills.
Sure. Absolutely. 100%. Look, this is I guess the issues that will continue to happen. This is not something that will change overnight, and it's how do you change that? How do we get to a point where there's some structure and some safeguarding around all of this? Does it ever get to that point? Like, are we at a point now where we're just about to kind of really spiral out of control, especially in the US at the moment? Like, it where the cracks are there, they're appearing. What's the biggest crack that's going to make it all fall? I mean, like, you build something on matchsticks, it's going to fall
Yeah,
at some stage, right?
I mean, Trump has burst the bubble as far as I'm concerned. After COVID, all that stimulus that was put in by the Fed and by the government itself, that really buoyed them up and kept them heads and shoulders above the rest of the world. And it
Mm-hmm.
put them almost in their own economic bubble.
Yeah.
So even when everyone else was seeing a little bit of pain coming through, a little bit of a weakness, the Fed was the America was almost isolated from that.
Mm-hmm.
But since Trump got in, when you looked at his policies, they were inflationary. Deregulation, tariffs was a massive one and a big shock for most people. I expected tariffs, but nowhere near to the levels of what he was trying to implement.
Mm-hmm.
And then removing the undocumented workers as well. So that puts wage pressure on the lower end of the scale because there's
Sure.
obviously less workers in that area. Obviously taxation as well. He's been trying to drop down the taxation, but not so much for the lower income workers or even the mid income. It's much more for the rich and for the corporate world that he's trying to help benefit there. So,
Sure.
that's fine. But, if you don't help the working class, I mean, there's going to be issues. And with inflation at such high levels, we're looking at it year on year. But if you look at it since 2020, how much inflation's gone up. I mean, the UK, food prices are up 40%.
Mm-hmm. I mean,
And
look.
I don't think it's that much different in the US. They've been used to being isolated a bit from those types of rises, but this time it's hit everybody.
It's just how far away are we from these people uprising? We're already seeing so much going on around the world. We saw in the UK over the weekend. There's a lot going on at the moment, which is pretty scary. But I think that's for another podcast as well. We'll try and stick to the Fed at the moment. So we know that 25 basis points is kind of pretty much priced
Yeah,
into the
so
market, right?
yeah, so I think we've got 25 basis points tomorrow. Wednesday Fed meeting because obviously it's over 2 days, and then after that there's going to be either one or two more this year. That's what I see.
Yeah, I definitely think so. I definitely think
I think
we're
there'll
going to see
definitely be
some more
one in
growth.
December. It's just a matter of whether
Yeah,
that you get one at the next meeting in between as well.
sure. The key though is about the tone, right? And that's, everyone's going to be watching out for Powell's tone, and that's going to be the key driver for volatility in markets, right?
No, well, yes and no. It is, but I tell you what's going to be the key tomorrow, I believe, and that's the dot plot, because that dot plot is going to show what the adjustment is from all the voting members for their expectations for the rest of this year and also into next year and then further on. So if we see all those dots dropping down, I think that's where the markets are going to react. But
Yeah,
again, how's the stocks going to take that? The stocks are going to take that as favourable. Oh, wow, we're going to get cheaper money again.
yeah,
But
yeah,
you've got to ask why that cheaper money is becoming available. It's
sure.
because there's, why are the Fed cutting rates when inflation is still too high for them? And it's because they see the dangers of a weakness of an economy and the jobs market coming through. Are
Yeah,
they really positive for stocks?
yeah. Well, absolutely. I guess the key then is how that ripples into like FX, commodities, equities. You've mentioned stocks already. It's going to have an impact across all markets. We're already seeing, and I'll go to the charts in a little while, but dollars under pressure, euros at like 4-year highs, gold's flying, silver's flying. Stocks are pumping as well. So it's going to be. I don't think we're going to get any huge surprises. I don't think this is going to be game changing by any means. But it's always good just to position at this stage. Really, just key for me right now is just really its levels. There's so much going on in the markets at the moment. There's so much, knee-jerk reactions. Just for me, it's just the only thing that's keeping me consistent at the moment is just having good levels.
Yeah,
That's for me. It's just
absolutely.
been absolutely key.
Yeah,
Um,
yeah, and I've got the specific levels that I use, but I think also the way the markets are moving, with the dollar as it is, it's weak already, and why you're seeing that sort of the strengthening of the euro coming in is because Lagarde was basically indicating that they're at the end of their rate cutting.
well, they done it early, which was a good thing.
Yeah,
They're on the fence now. So and they just looking around and see what everyone else is doing. Like the economy is not brilliant, but it's okay. It's steady. It's a safe bet at the moment. Where
yeah,
they're looking around at all the turmoil that's going on in all the other central banks, and they're going, well, let's see what you do. We're okay for now. We've got some stability, and that's a great vantage point really for the ECB, right?
yeah. Well, they've managed to get their inflation rate down pretty quickly to around that 2% goal that they was
Yep.
after. And
Yeah.
of course, 2% is sort of an optimum level that they think of. When you think of where that 2% came from, I mean, it doesn't really sort of make that much sense, but 2% does because it's growth, but it's without uncontrolled. If you look back before 2020, central banks dreamed of 2% inflation. They couldn't create it at all.
Yeah.
And
Yeah.
then it's a case of be careful what you wish for, because when we got it, we just got a whole mass of it all those previous years that all accumulated into the last 3 or 4 years. And of course, everyone's feeling that type of pain. So as you say,
Sure.
at some stage that there's going to be some unrest somewhere, and whether it's political or however that's going to take place, I really don't know. But if we get back to sort of obviously what we're looking at here with the Fed and what they can do, so I still think for Powell, we've got to remember that his term's up in May next year, so he's running down the clock at the moment. But again, he's been fighting back, as some of the other members like Cook have been doing, to hold on to their jobs until their terms are up. And obviously that's because at the moment they see that there's room for some rate cuts, but they don't see room to halve rates.
Mm-hmm. Sure. Yeah, absolutely. And then I suppose on the other side of that, then just to quickly touch upon is obviously Bank of England and then BOJ. I mean, like they're going the other way at the moment. Like Bank of Japan are looking to start to increase now, ratchet that up. We're going to see a profound effect on the currency market. Where do you see things going?
Yeah, I mean, again,
What's your
that dollar yen, I mean, can move a lot.
it's going to get
Because
volatile, right?
yeah, because if you've got Japan putting rates up, short-term currency traders are all about yield.
Yeah,
So if you've got Japan putting their rates up and you've got America dropping their rates down,
yeah,
again, that's going to add extra weakness to the dollar and strengthen the yen.
yep,
For the
yep,
Bank of
exactly.
England, I think uh, they're probably on holding this week, but again, they've got to be a little bit concerned about the economies, especially with what the Labour government's been doing since the budgets. Uh,
Services sticky at the moment, right?
yeah, and I mean, there's a lot of the high net worth individuals that are leaving the country. I mean, Ed Sheeran's just announced that he's even going to leave.
Is that right? Yeah,
Yeah.
interesting. And I suppose to talk about some divergence within this, and I suppose talk about how the effects of these divergence will kind of continue into the future. You've touched upon it there, but I mean, where do you think? I suppose first of all, where do you see dollar over the next 6 months? And I'm not holding you to any kind of a figure or like. There's got to be weakness, right? Like, I mean, for me, we're going to see continued dollar weakness, and I can't see anything else other than that at the moment, personally.
Well, I think you've got a weakening economy. You've got an increase in the jobless numbers in the US. And, guys, take a little bit more attention to the jobless claims on a Thursday. You know, pre-COVID, we ignored it. After COVID, it became the most important data. Then it sort of dropped off the radar again. But as we start to see these jobless numbers increase, it's something to really sort of take note of again, I think now.
Sure.
And that's going to be a sort of around there, but sort of when we're going to get this more divergence from is the change in policies that we're seeing. And even China's probably going to have to cut their rates again because they're in danger of missing their 5% GDP now.
Yeah, yeah, absolutely. And what I'll do is I'll just jump on some charts as well here.
Yeah, but for the dollar itself, I just I've been a massive fan of the dollar for the last 5 years, but this year I changed my mind, and thank God I did. But I don't think there's much positive news to come out for the dollar. That's the problem.
Yeah, I agree.
I can see it
It's
weakening against all the majors.
yeah, but look, this is a good thing now, right? I mean, this is what we're looking for. This is crystal ball stuff.
Well, yeah, but
This is
again, guys, just remember this is our views. This
absolutely, yeah,
yeah, and
yeah,
that's all it is. But
100%.
um, yeah, I mean, I, but then you look at the pound, you look at where the pound to the dollar is, in the 136s. I mean, it on one side you think why should the pound even be up at 136 because we've got as many problems, if not
Yeah,
more, than America,
yeah,
but they're there. But because Europe managed to get their inflation under control much quicker, I can see why the euro should appreciate and
yeah,
the yen,
100%.
of
I agree.
course. So. And then, of course, if people start getting even more nervous about the economies, then they're going to start moving into the Swiss as well.
Yeah, that's actually a good outside bet. Really looking at some of these other miners as well. But I mean, like again, looking at pound dollar, and look, we've been trading sideways for a while now, right? I think key levels there people are going to be looking for is somewhere around that kind of going back to sorry, just move this out of the way. Going back to the kind of like June levels, really. I mean, it looks like it's pushing up there again. It's hard to see any downside at the moment while we're above this kind of 1358 level. I think that's pretty firm enough level. I think we can stay above that. We should see a continuation. And again, this is my opinion, my view. Again, euro dollar is just flying. What a day it's had.
Yeah.
Incredible. That's 4-year highs. Not going away. I mean,
I mean, the last couple of days, everyone's been saying, why isn't it at 120 already? And
it's I can see it getting there for sure.
yeah,
But again, it's backed by the dollar. I mean, like we have to see where the dollar is going, really, right?
yeah, and,
I
and that's
mean,
the thing as well, is you've got to be careful about, okay, if you trade in the pairs, obviously you've got the dollar involved. If you trade in the cross rates, then you just got to be a little bit more cautious, and you've got to look at the different economies, the different interest rates, and the different circumstances between them. So again, it just really depends on what you're trading.
100%. I mean, like, look, we're looking at kind of, it's at a pretty key level there at the moment in the dollar, and I think it'd be significant once if we do see a break below that kind of 96.5 level. I think that could be significant and open the door to a kind of a wider drop in Dixie for sure, personally.
Yeah, and the other thing with that as well is, of course, if Trump continues on his road of replacing members of the Fed with like-minded, shall we say, members that for what Trump's thinking, then is he really sort of manipulating, politicizing the Fed, almost sort of taking away its independence again, even if it's indirectly, because again that could then really get investors concerned, and that could have a big impact on the dollar, if not this year, next year.
Yeah, absolutely agreed. And again, like looking at dollar yen, I mean, like we've since intervention, way back, we're seeing that kind of consolidation and that nice wide range here.
Yeah.
Like for me, like, I don't mind trading ranges or breakouts. I'm looking for both. I mean, both can be as profitable. Personally, I'll take one side, whether that's a buy or sell side, but I'll trade that range all the way through. While I'm waiting for that breakout. Obviously, I'll learn a bit more about how you're trading and
yeah. I mean, I've got
trading.
different charts. I've got a different chart that I use for a ranging market than what I use for trending markets. But again, the rate, what I use for the ranging market will also indicate when there's going to be a breakout as well. So
sure.
I'm always happy trading the ranges, but I'm always ready to trade the breakouts as well.
Yeah.
That comes, I call it a cut and reverse. So when I get stopped out because it's going to break out that range, I actually reverse my position as well.
Yeah.
Just flip it over.
Yeah, exactly that. I think there's more potentially. I think a lot of our stuff is kind of similar in some ways. I know you're more of a bull, kind of a bear trader rather than a bull. I don't really care what side I'm on in the market once I have a firm enough bias through my sentiment. But for me, it doesn't really matter too much. I think you said something in the podcast a while ago that really stuck with me, and it's so true that if you're a bull market, it's kind of like more of like an escalator. As if you're a bear trader, it's like a lift, right? We're talking about some really, really big moves, and
yeah, the market takes the stairs up and the elevator down.
There you go. There you go. Exactly that. And we can't really ignore some commodities. I mean, gold, like it's been so funny because there's been so much contradiction around gold for so long. Nobody could see it breaking the levels it broke.
Yeah,
but
I'm sure everyone's trying to short it on the way up as well.
Well, that's the thing, right? I mean, we're not seeing any major pullbacks in it. I mean, we're just seeing continued upside, which is incredible. I would have thought we would have seen some kind of profit taken around, around these levels, but it doesn't seem to be. People are just bullish. I mean, you got to think about.
It's an inflation hedge. It's a risk-off trade as well. So there's a lot to keep holding that up.
Absolutely, looks a non-yielding asset, and
of course a weaker dollar helps push it higher as well.
100%, absolutely, and that's why there's potential further upside again for gold. I mean, as much as nobody likes buying at the top, I mean, are we at the top? Are we overextended?
Yeah, well, it comes back to the old saying that I used to do. Today's high is tomorrow's low.
Yeah, it's very true. But I mean, So I mean, do you think there's potential further gold? As in, I'm not putting the gun to your head, but there's certainly potential. I mean, with the political issues, with macros, everything's kind of pointing to why would you want to get out of your gold trade right now?
Yeah, why would you want to short it? Again. That's the big question is okay, you might want to sell it because you think it's too high, but all it does is keep going higher, so it's telling you something. I can't see any reason to sell gold at the moment. There's a lot of geopolitical issues still going on. You've got the Trump situation. You've got dollar weakness. You've got people getting more nervous about what's going on in the economies, jobless increases, etc. It all leads to a bit of de-risking coming in at some stage. And of course, where are people going to put their money?
Yeah, exactly that. Then you got the laggard, and silver's really killing it at the moment, which is look, at the end of the day, there's a few reasons. Look, silver will always follow gold generally, right? But also you got industrial demand, obviously, EVs, solar, tech. All these things will prop silver, right?
Yeah, and then you can go into dentistry. There's loads and loads of different industries that silver's used in. And then you can go into sort of mirrors, and it's endless. It's endless.
Absolutely. And then I suppose in just to go back to gold as well, how important is central bank buying in gold as well, do you think?
Well, I mean, the Russians and the Chinese have been buying it for years by the tons, and they're probably still adding. And of course, when they was buying it sort of years ago, it was again to start to sort of take away their reliance on the dollar or their investment in the dollar. And they've got such a great average. I mean, even if they were still buying today, their average is so low in comparison to where the market is.
Yeah, agreed. I mean, like, what's gold, like a 25 trillion market cap?
Yeah. One of the interesting things about gold is there's not actually that much dug out the ground every year. A lot of the, if you call it new gold, is just recycled gold.
Yeah. And if I suppose if you look at it this way as well, I mean, I think the whole entirety of Bitcoin is, I think, 2 to 3 trillion market cap. So you've got to look at those and go, okay, well, does that mean there's a huge amount of more upside for Bitcoin? I don't know. We'll move on to Bitcoin now in a minute, but first of all,
I think also,
WTI.
El Salvador, because we're talking about Bitcoin and gold, El Salvador started to move, from what I understand, out of some of their Bitcoin actually into gold.
Is that right? Yeah.
Yeah.
Well, look, it's a trade off, right? You've got, it's a risk on asset. It's volatile. Then you've got gold that just continues on that lovely trajectory of upside. I mean, what do you want? I mean, we all want, to try and get those big gains, but at the end of the day, when you've got high risk, I mean, for me, I think I've been in gold for quite a while now, and it's one of the best trades out there. I mean, if you get in early, any trade is good, but I just feel like Bitcoin is still, look, there's so many contradicting points around Bitcoin. Where do you think it's going? I suppose let's just jump onto Bitcoin now while we're talking about it.
Yeah, I'm a better trader, so I love to sell markets, but I'm a little bit cautious about selling Bitcoin. And 2-3 years ago, it was always a sell the rally situation. But since the ETFs have all been approved, and now you've obviously got Trump in favour of it, whereas previously he was against it, and pretty much the rest of the US governments as well before him. But now strategic digital reserves, everything's more positive for digital currencies, and it comes up to an interesting point, because then if we start to go into talking about sort of stable coins and going into other sort of areas like that, then something to remember. We're talking about dollar weakness at the moment, but overall the majority of coins and tokens are all valued in dollars.
Yeah, absolutely. And look, for me, I think there's, will we get regulation is the key. This is something that's been ongoing for so long, right? If regulation comes in, what does that mean for these, for crypto as a whole? It's trying to find the intrinsic, tangible value of something, and that's something that people can't get into their head sometimes, right? It's like, if you give me a piece of gold, I know that piece of gold is tangible, it's got value, and I can see it, feel it, and I know it's there, and I know I can trade it with you if you want something from me, let's say, right?
Yeah.
Whereas I feel like because crypto is it's a new age thing, right? It's the technology behind it is awesome.
Yeah.
Banks are using it now. Banks are using going into crypto and for these instant transactions, and everything has to catch up with it. The antiquated banking systems, everybody has a pain in their ass with. People want to be able to move their money quicker, faster, and but really, what Bitcoin is, if it becomes regulated, then is it just going to stay as that Rolls Royce, and then is it supply and demand then that continues to drive price then after that?
Well, the thing with that is demand might increase, but supply doesn't increase with it, because obviously you've got the halving every 4 years.
Yeah, yeah.
The last one should be created in 2140, I think it is. Although
Is that right?
that could become earlier, I guess, with all these quantum computers and other things that are coming through over time. But regulation, yeah, I think it'll get it, but that could take the shine off of it for some people, because the more regulated it becomes, the more centralized it becomes rather than decentralized, which was its attraction in the early days, going back to sort of 2008, 2010.
Yeah, I absolutely agree.
But
I just want to touch upon. Sorry, go ahead.
yeah, no, I was just going to say, but then you've even got Coinbase now that's looking to bring out its own token. And if you look at the amount of money that's been generated in certain political areas, I mean, it's huge. I mean, you're talking like $500 billion minimum.
They're looking to tokenize everything now. I mean, real estate, everything. I mean, like we're really pushing towards something. I'm not sure if it'll ever gain any traction or not, but there's a huge potential that it could, and everything becomes,
yeah, it's all merging and sort of overlapping. So it's just a matter of even before COVID, I mean, electronic payment transactions had overtaken fiat currency payments, cash, and of course after COVID, I mean, that just magnified out. It was, the amount of cash that was being transacted was minimal because we was all locked down. And there's there's places now that even Starbucks around by me still doesn't take cash. It makes me laugh. Oh, we've suspended cash payments. No, you've stopped cash payments. But and that sort of goes through because, okay, so first of all, you haven't got the risk of being robbed. You haven't got the risk of that money being lost or stolen to a degree. I mean, obviously, crypto can be hacked, but and the money is straight in that company's account. There's no cashing it all up and taking it to the bank. It's a much more clear, direct process.
Sure. And on a separate note, obviously, Fed easing could obviously fuel potentially another run for Bitcoin, especially.
Yeah, the more uncertainty you get, the more the bigger the belief or disbelief comes in governments and the way they're running the countries and the world, the more you can see everyone looking for different avenues to take.
Sure, without a doubt. Just want to touch on oil as well. I've seen a bit of a break of that kind of.
One of my favourites.
Is that right? Yeah.
Yeah, I love oil. I used to be a market maker for both the oil exchanges many years ago.
Awesome. There's lots we need to catch up on and chat to. But tell me, we've seen a bit of a breakout of that level. What are we talking?
I sort of expected that.
65?
Yeah, maybe a little bit higher personally. From the beginning of the year, I've been bearish of oil all year, and I said it would go down to 50. I mean, it did get down to 55 for TI, and obviously we've had spikes because of different things going on. But I think the current, last few times it's sort of come down to those low 62s. I've been buying it, and I've done okay on that. I'm out of everything at the moment, but I see the potential for it to go up at the moment because if Trump manages, I keep coming back to Trump all the time, but if Trump manages to convince India and some of these other countries to stop buying Russian oil, they've got to replace that supply from somewhere.
Sure, absolutely.
And whereas before it became a case of those countries buying from Russia because it was cheaper because Russia was discounting it, then those other countries that stopped buying from Russia replaced India and China. So really there wasn't any change. It was just musical chairs with who was buying from whom. But this time round, I think if Russia is prevented from selling, to put a lot of pressure on him to come to Putin to come to the table, to come to some form of agreement to stop the war, then I see the likes of India and some of these other countries that have been buying from Russia needing to go into the market to replace that supply. And it's available, but it's going to squeeze prices higher.
Do you think after seeing this new world order, come together not so long ago, do you really think the likes of India? I think Trump's really, knocked his nose out of joint. To be fair, I think it seems like this kind of like, well, which side will I play? They're rubbing shoulders with Putin, and for me, that was a show of like, well, if you don't play ball, Trump, I'm just going to join this allegiance. Basically, right?
Yeah, you're getting to that sort of us and them situation, aren't you? And that's getting stronger and stronger. And again, that does become
he
a
started
major
this
concern.
whole game. He started this game. He started with this kind of bully boy tactics,
Yeah,
like
absolutely.
so. The only way that people can respond to that is really to turn around. Like look at EU as well. I mean, EU were even talking to China about potential trade opportunities and so on. So I mean, like it's like everyone's doing the same thing. It's like, okay, well, if you are going to increase these tariffs, we're just going to go here, or if you are going to, look, at the end of the day, there seems to be a big juggling act with people. It's like nobody wants to not be in bed with America, but you also have to understand that there is a possibility that chain may break.
Yeah, because he created that issue himself with all these massive tariffs.
Yeah.
Everyone thought there was one, maybe two ways this could go. So obviously, the number one was that everyone negotiates with America and tries to come up with something that everybody can live with. The second one is that they reciprocate and they put massive tariffs on America. And you've had a combination of that from the different countries. But there was a third and a fourth, and the third one is literally that people countries try and bypass America and do business elsewhere. There's not much that America produces that you can't source anywhere else in the world. And then the fourth one which is something that Trump, I think, was also trying to create, was that to bypass the tariffs, you basically set up shop in America. Then obviously that's good for the American workforce. The company can benefit from potentially lower taxation because they're inside. And of course, they've removed all the threat of tariffs because they're producing inside America. So, you've got those different scenarios all playing out, depending on the countries involved.
I mean, like again, where is OPEC at the moment in terms of are they going to ramp up? Are they going to slow down?
But they've been steadily increasing supply, but they've been very cautious in the way they're doing that. And again, with all the uncertainty and geopolitical issues we've had over recent years, it's surprising that oil isn't much higher than it is in one way. But you can understand it because, although things have changed geopolitically, not much has changed in the way of supply and demand.
Slow down in growth, maybe in China as well.
Yeah. You've got the slowdown in growth in China. Again, you've got the risk to the growth in America still at the moment, and to the UK and other countries. So, how that's going to play out is going to take a little bit of time. The oil market is very slow grind. And of course, we're seeing that rally starting to come in now. As I say, I think that's based more about the potential chance that some countries will need to replace their Russian supply.
Right, absolutely. Okay. Well, I'm just going to quickly jump on as well to some stocks, right? I'm not going to go on too much. I'll tell you what, let's have a quick look at some indices. DAX is struggling a small bit. What's your take? What's your take on the DAX kind of?
It's just Germany, isn't it? I mean, Germany and France are pretty much in the same positions. They got weak governments, weak economies. France was just downgraded as well.
Yeah. Was that
Um,
to
and
a
you know,
minus
by
A? Is it
Fitch, I'm sorry.
to a minus A? I believe, was it,
Uh,
or A minus or what?
yeah, yeah, and you know that they're a grade below the UK now even. So, but you know,
But
then
that's
you
political instability.
it
There's so
is.
much going on over
Yeah,
there.
but it's also because they, you know, in France, it's because they can't get a budget passed either because they can't keep a government together long enough to find common ground to get it passed. And of course, that puts them in massive danger of breaking EU rules. And how the EU is going to respond to that, who knows? And then obviously for Germany, they've been in a similar situation. They're pretty much probably going to get a budget passed, but again, that they're having to, you know, Europe as a whole, I believe, really hasn't spent over the last 10 years. They've kept their hands in their pockets. And that's one thing that Trump did with NATO, is forcing them to sort of defend their own continent rather than America doing it. It's made them realise that they do need to spend. And of
Yeah.
course, you know, Germany lost all that cheap gas from Russia. So, you
Mhm.
know, there's lots of different little things going on, but they do make a big impact over time.
For sure. I mean, but like they had a decent run for a while there, the DAX. That kind of way we see it
Yeah,
here. I mean,
because
like,
there was that expectation that Germany was going to spend another 800 billion and, you know, a mass of it's going to be on defence, you know, but that's over a number of
yeah,
years. That's not
yeah.
tomorrow. And that's even if
Hmm.
they can buy enough uh, what they need. But it's you know it's going to be a slower expectation. I think. I don't think they're going to rush to spend that money, and that's of course you know sometimes there's in Germany and that you can get these legal challenges of you know should they have they got the right to spend that money.
And was it also people maybe diversifying into European stocks as well, potentially?
Well, yeah, because you know there's a lot of institutions that feel that they're a little bit overweight at the moment in the US now. You know, it's great seeing them at all-time highs, but you know, there's going to be a point where they're not going to be able to sustain that,
Yeah.
especially if weakening economy, you know, increasing jobless, and you know, the 2026 is going to be an amazing year. There's going to be so much go on in that, but of course we've still got 3.5 months of this year to go through. But there's going to be so many sort of swings going on over the next 15, 18 months for sure.
But I mean, it's seen the likes of Nasdaq, S&P, they're flying. Do you know, like
Yeah,
when you see these hitting all-time highs, it's kind of like you're almost also saying, well, why, how? Yeah, we've got an AI boom, I guess, which is really kind of pushing everything north at the moment. But
absolutely.
AI is expensive. AI development is very expensive.
Well, it is,
And
but
it's
it's
all about
also, you know, it's also about the amount of energy that it uses. So
yeah,
everyone used to criticize Bitcoin miners for the amount of
yeah,
energy that they were using. But when you
yeah.
look at the amount that's being used in AI and all these big companies like Microsoft, Google, and all that, they're all trying to secure future energy supplies where they can. And something that's not really talked about that much with AI is the amount of water that's used as well,
Yeah,
obviously
yeah.
to cool all the machines.
They're actually trying to create new ways. I'm not sure if they've done it yet to actually continue to circulate that same water, but through cooling systems and things like this. But
Yeah,
yeah, yeah, I think look, for me, obviously looking at this individually, a couple of stocks as well. I mean, like just one I wanted to touch on. Well, let's touch on Google first. I mean, Google's flying.
yeah.
We're seeing two sides of this kind of AI rally. I mean, Google's absolutely flying at the moment.
Yeah.
There's a few reasons for that, obviously, but a lot of it is dominated by their AI expansion. They've had kind of strong cloud growth as well, and it looks like they're just investors obviously thought there was still huge value in them. I mean,
Well,
like
they're
they've
spending 100 billion plus on AI. Again, you've got to question when they're going to get that money back. But on the other side of that as well, I think what's given them an extra kick is that they managed to come to an agreement with the EU about their fines
That's
their
right.
management of how they control the net and various aspects of it, which again I think is given investors confidence.
Sure, the kind of reduced regulatory issues they have, and they've also just now reached over that 3 trillion mark, which again was always like
Absolutely,
a
yeah.
real milestone for them. So there's a number of reasons I think that's just driving their price there. But I mean, I suppose on the other side of it, like I said, high spending within AI, potential more regulatory battles down the line, and there's a lot of competition in the market at the moment. You
You
know,
need to see a
pumping.
return for that investment as well.
Yeah, yeah, absolutely, 100% agree. Um, Again, I should just Nvidia again. Nvidia's not doing a whole lot at the moment. It's not really kind of seeing the pop. I mean, that Google's seen there, but I mean, it's been on such a run for so long.
Yeah, yeah. I mean, it's massive.
It's
It's been such a great story. Um,
yeah,
but of course, where they are now is they're sort of a little bit in limbo, and it really depends on what the likes of Google and everyone and how they use, obviously, their uh, company and how much competition may come through as well against
well,
Nvidia.
they're clever enough. I mean, he's rubbing shoulders with Trump. He's plowing money back in. I don't see anything. I don't see anything rather than further potential upside for them at the
Oh
moment.
yeah, yeah.
Um,
Yeah. I mean, they might have their small sell-offs again, depending on
yeah,
what's going on. But semiconductors is the future. And when you look at the amount that we use or we need in everything that we build these days, it's crazy.
yeah, absolutely. Quick look at Tesla.
Aha, yes.
This is a funny one because I don't know how many people always ask me the same question. What's going on with Tesla? Is Tesla going to bounce? Is it underweight at the moment? Is there potential value there? I mean, yeah, it's great that Elon's just threw $1 billion in there and
Well, I
moved the
think that's the
market.
key to this last rally is the fact that
Yeah,
he went in Friday and he bought around about $1 billion worth of stock.
yeah,
And of course, why not? I mean, if the guy, however he uses Tesla going forward, not necessarily just for EVs, but
yeah,
if he can get the value of that up to something like 8.7 trillion, I think is the target, he becomes the first trillionaire.
yeah, exactly. You've also got robo-taxi, obviously autonomy.
Yeah, and robotics as well. They're looking to bring out sort of
Robotics is huge.
just robots as well. Like
that
so
that's going to be the next thing. It's going to happen. Everyone's going to have a robot. You know what I mean? Like, it's incredible how, and they can actually get them off the chain line real quick. That's ready to go. That's closer than anyone even realizes.
yeah. Have you seen the films Terminator?
Yeah, I have. I'm old enough to have watched that. That was one of my favorite films growing up, actually.
Yeah,
Yeah.
we're getting closer.
Yeah,
Skynet.
you reckon? Yeah, especially as we don't really know. I mean, like we're seeing AI at the moment that's blown my mind in terms of its developments, in terms of its capabilities. It's when that AI can start to think for itself as to when we have a problem, right? When it can start to,
Well, because then we become so inferior to them. And of course, we utilize resources, we consume resources, which they
yeah,
won't.
yeah, absolutely. Do you think the valuations are slightly stretched with that kind of big jump to the upside?
Uh, it's just a Musk factor, isn't it? I mean, there's so many people that just idolize him, and whatever he does is going to touch. It's going to turn to gold.
Well,
He only has to open his mouth and talk about Tesla, and it'll pop the shares anyway. But the fact that he's bought another $1 billion worth has obviously pushed it and done that to the market. And of course, it's had
sure.
that breakout. Whether it's merited or not is going to depend a lot about the production, what they can bring through in the future, which is not necessarily going to be anything about electric cars eventually.
Yeah,
That
yeah.
I
I mean,
think that's going to become one of the smaller areas of Tesla. It's going to be more about the robotic side and AI that's really going to grow that out, not EVs.
and the other side of that is okay. He's just put £1 billion in there. What does he know? You know what I mean? Well, it's the whole idea of insider trading, right? It's like, what does this person know? Why have they just done that? Is this just to boost them up, a confidence boost, or is this something pre a release of something that's coming out? Who knows? But margins are under pressure. Obviously, the likes of China, or, Europe weren't buying a whole lot of his cars, so there wasn't a whole lot good going for him. But whatever about Elon Musk, he just always has something that will just turn the clock. I'm a firm believer in following good leaders, good business people. The guy is a good business person, whatever way you want to see it. He's made some
Yeah,
bad
he's a
decisions along the
visionary
way,
for sure.
but he's a visionary. He's creating the future. He's
Yeah.
going to have, he's going to have a real stamp on how our future looks like.
Yeah, it makes
And,
you wonder if he's actually come back from the future.
that's another, that's probably about an hour's conversation. But yeah, nothing would surprise me. But the guy seems leaps and bounds above everybody and anybody.
Yeah,
I don't know how he
he's
can.
just got such great insight and as I say, vision of what's, what or why or how something's going to happen. Or, he always backs the right horses. Okay,
Yeah.
sort of, Twitter wasn't one of his best, but, he merged that with the AI and sort of integrated it again. You know, over time, will he get to the point where he merges all of his businesses into one or two?
SpaceX is a big one, right? I mean, everybody wants a piece of SpaceX.
Yeah, but there's only a few private investors that manage to get anything out of that because obviously he hasn't made that public so far.
Yeah. Absolutely. So just a bit on you, Chris, I guess as well, because you're going to be in our app and you're going to be doing your own analysis, sharing your views on the markets and so on. Like, tell people what kind of a trader you are. Like, would you say you're more of a fundamental, sentiment, technical combination of all three? Where do you kind of sit?
Yeah, I'm a blend. I mean, I'm fortunate that I've seen every major event since the 70s, traded them as well. So I've got very strong macro understanding, and I just use that as my bias.
Yeah.
As per what I'm seeing in the technicals, and if I can get my fundamental bias and my technicals to align, then for me, they're great high probability trades. And that's what I'm looking for. But yeah, I'm a big fan of the technicals as well. I've got 3 different charts I use, 3 or 4 different indicators, not all at once because I don't want to make my charts too busy. But again, it depends if it's a trending market or whether it's a ranging market to what I'm going to use and how I'm going to build my positions based around that.
Absolutely. We haven't had a chance to really sit down and actually look at charts together yet, but we'll certainly be doing that soon because, again, your principles are very similar to mine, but I'd love to just kind of squeeze more information about how you're looking at certain things in certain ways, and that's going to be, I keep things as simple as possible, personally.
Yeah, likewise.
I've tried so many different strategies over the years, and I've always gone back to where it all started was just keeping it simple, like keeping it as simple as possible, using maybe 3 or 4 indicators maximum, looking at my levels, building a bias through my sentiment and macros. And then, like I said, just when you've got the right levels, you know where you've got a high probability of getting your entries right and your stop losses in the places where you want them. And that's the key. So waiting for the trade
managing your risk as well. And obviously, with technicals as well. It was quite funny because doing a short course, and yesterday was the first day, and I was showing the guys some of the stuff, and I keep it really simple. And one of the guys in the background while I was talking, he was obviously checking it out, and he's like, "Wow," he said, "I'm just checking oil." He said, "I can't see it having a loser so far," just because of one of the things one of the sort of strategies I was showing them with the technicals.
Yeah, well,
but obviously there would be some if you go back far enough because nothing works 100%.
And just to talk about it briefly, I mean, you're working around some algorithms and things. Like, obviously, my side of things, I'm playing around a lot with AI in trading. That's where my main focus is at the moment, is trying to kind of level the playing field, give kind of institutional type tools to retail traders, and that for me is key, is to help traders make informed decisions, and to try to, I guess, when you've got 15 or 50 years of experience in the market, it's easy for you to identify things. But we
Yeah,
don't have that much
and you know, because
experience.
we learn to adapt over time. You know, and we've seen that over the years as well because we've had to do it ourselves. And
Absolutely.
you know, it's also, you know, what's new, how can you use that? How can how can you gain an edge from whatever you're using, and can you increase that edge? Can you improve that edge? Or, you know, careful, obviously got to be careful that it doesn't take you backwards as well.
Absolutely.
But you know, AI most certainly. Again, just got to be a little bit cautious, you know, because you know, I'm sure most people have gone, oh, build me a trading signal in Chat GPT or whatever, but it makes so many errors. You know,
Yeah.
if you haven't got the understanding, you're still not going to make it work. So
100%.
yeah, so it's not that simple, but it can put you on the right guidelines, which obviously is what you're getting. And you know, so AI is great, but it's not perfect because all it's doing really is feeding off of what's already out there.
Well, see, the thing is with AI, I guess it's two different things, right? It's all well and good having a chat GPT and asking it a question, but having an AI that we spent a hell of a lot of time on over the last 12 months. And the key to that is actually trying to tweak it to a point where it is trader focused, where it is going to give the information that you're looking for, the key data, key information, whether that's coming from top news articles, top traders, or top voices within some socials, and also looking at charts and identifying all of these three points, and then giving kind of a summary and an understanding of how bullish or bearish the markets are. These are the reasons why. It saves you having to spend hours and hours looking at charts or looking at the news and looking at, people are becoming more and more time sensitive, time poor, if you like, and but at the same time also want to be able to jump onto their charts for an hour in the evening or half an hour and play some trades. And if you can utilize AI in the right way to give you that broad viewpoint of what's going on in the markets, to save you having to spend an hour on Bloomberg in the morning or whatever the case may be. This is the key. It's just trying to look. We're seeing some of the biggest hedge funds in the world using AI.
It
I
just
can't tell you how much,
condenses
but I
and
know it's a huge
simplifies all the
amount.
data. It just clarifies it all for you because it's draining all these various sources at once.
But
Uh,
the key is man with that as well. It needs to be
yeah,
there needs
yeah.
to be man and machine. It can't just be machine.
No,
It
no,
needs
and
to, that's
it gives you that insight, but then you've got to work out how to use that insight to your advantage.
exactly
And
exactly.
but what it will do is it will give you more time and opportunity to focus on the price action that you got in front of you because that's key.
Yeah, absolutely. And obviously, I know you're working a bit in the background with some algorithms and things like this. And we had this conversation before, but it's like, imagine you could have that algorithm, but build your brain into that algorithm. Like it's all well and good setting targets and setting all these kind of all these factors within what it needs to do at different times or different points. But if you could feed it with your brain, your AI, your understanding of the markets, why you would take that trade, maybe that setup's good, but you're not going to take that trade because your bias is off. Or once we get to that point where we can combine the two, and really you can really then curate a bit of a monster, right?
Yeah, yeah. There is an alternative way of doing it, and that's take somebody and remove all their emotion because that effectively would give you the same thing.
Well, yeah, but it also means you have to pull the trigger all the time and sit there in front of them all the time. But yeah, agreed, absolutely. I think everyone. I guess that I've been doing this a long time, and I've kind of seen the evolution of traders over those years. And like I said, people are becoming more time poor,
Yeah,
and
yeah, yeah.
it's. But at the end of the day, they have to realize it's a skill. So your options are learn the skill or take a punt. Really, that's your two options, right?
Yeah, and I mean, I think it doesn't matter which way you go forward. I think it's always good to have a deep understanding of how the markets
Yeah,
work and
yeah.
how trading works to be able to tweak things and make them your own over time as
Well,
well.
for me, it's like because I've done education for so long and taught so many people over the years. You can't like you can only help some. You can help people as much as we can, and it's up to that person then to kind of take that guidance. But really, regardless if you go on to be a professional trader, part-time trader, or just stop trading, like if you have an understanding, you can go to your QFA and go, well, what are you doing with my money? Or you can understand what your pensions do. You can understand, like I honestly believe this should be in schools. I genuinely believe there should be some kind of better understanding of finance for kids coming through school, and it would probably stop kids from falling off a cliff when they see let's make €1 million or 100% returns and all this crap that's out there.
Yeah.
At least it might be educated and understand that this is not possible. Yeah,
Yeah.
you might get really lucky, but go to the lotto if you want to get lucky.
Yeah,
Um,
and that luck doesn't last forever, especially in
yeah,
trading.
yeah,
But yeah, no, I think that for people, if they can understand, if they can grasp it, I call it the inner trader. So you can teach somebody how to trade, but whether they can do it or not is obviously another matter. But it's just a matter of whether they got that inner trader.
yeah, absolutely. I
Uh,
think,
and of
and
course,
it
the
doesn't
other
matter what
thing,
background you have.
yeah, sorry, all I was going to say was, but the other thing is when people have got that deep understanding about the markets and trading, even if trading's not for them, then it opens up other avenues. They can go into compliance, risk management, middle office, back office. So,
Yeah, yeah, yeah,
there's always some value to it. You can
yeah.
always use it some way.
100%. Before we finish up, I just wanted to kind of talk about options a small bit. Now, it's not something that I do personally, but it's something definitely I've thought about trying to push towards and go into. Tell me a bit about options, why you'd use options, especially around what's going on at the moment with obviously their Fed cuts.
Yeah, actually, I was having a conversation first thing this morning with a fund out in Asia about options, because that's their main business with algos. And I was quite interested in the way that I trade options, because it's a little bit different to most. But uh, that's for another day. But for tomorrow, that's going to be part of my strategy, is trading options. And the reason for that is, I'm definitely not a fan of these 0-day options, because I think they're just pointless, really. You might as well just go long or short in the market. That's my personal view. But where I think that there is an opportunity on the FOMC meetings, that on the quarters, is that the options expire 2 days later. So the premium that you're paying is much lower.
Right.
And for me, that's a great opportunity. And when I did it, I did it at the December one, because the December one was a great one to do it, because everyone was expecting so much from Powell, which he wasn't ever going to deliver, because Trump had just got elected. And I sort of read what was going to go on. And the thing I like about options is that it gives you a guaranteed stop loss. So as the buyer of the option, whatever you pay out in premium is the most that you can lose. It's like having car insurance or house insurance or something, and something happens, or tech, the most you lose is your premium. And that's it. And it's the same with options. So why are you paying that premium? You're paying that premium in case you're wrong, but it's giving you a guaranteed stop loss. Now, when I do longer term options, that means that I can carry that risk over weekends even, but I know my worst case scenario is the premium I've already paid out. But what I love about the quarterly FOMC meetings is the fact that there's only 2 days of premium, so they're much cheaper than they would normally be. So in December's one, we paid out $3,300, only for 3 contracts in total, $1,100 each, and the return on them the following morning was $19,600.
That's incredible.
So we got over a 5-to-1 risk reward on that. Now, the reason I do that is, I could take just a pure outright position, but the market could move far enough against me to stop me out first before it does what I expect it to do. But with the option, I don't need to micromanage that risk. So the market can go against me first. I can sit back, relax, because I know the most I can lose. And then when the market turns in my favor, then that's a different thing, because then I can just cash in on the option. Or if I've got longer term options, what I like to do is use the underlying to hedge in and out, because that's the way I can maximize revenue from those types of options.
Awesome. Tommy, is there anything that you can't do?
There is, but am I the best trader in the world? No, but am I one of the most consistent? Probably.
Awesome. And that's the key,
And for
right?
me,
And
consistency is key to trading. It's if you're going to reach for the moon every day, you're just going to destroy your account over time. But if all you're doing is just looking to accumulate every day as much as you can from the market without getting greedy, then for me that works.
Yeah, that's the key. It's longevity.
Absolutely,
Right.
absolutely.
Well, do you know what, Chris? That was awesome. I really enjoyed that. Obviously, guys, anyone that's listening in, Chris will be in the app, sharing his analysis, sharing his strategies. Also, there, if you want to ask any questions to us, guys, jump into the app. It's completely free to jump in there, and let's get going, guys. The key is to learn from the best, and Chris is definitely up there.
The thing is I enjoy the training. I enjoy helping people. So my traits are my passion is definitely trading, but I love to help people anyway. So
yeah.
When I can combine that. And I get to meet so many amazing people as well during the courses. I love that.
I love the fact that you're trading for your grandson as well, and I think that's such it's a real good story. It's a feel good story.
Yeah, well, I'm not necessarily. I'm not trading for him. Trading I do is a separate part of the business for me. But all the revenue that I create through the courses and all that goes to his future. He's only 3 at the moment, and he's so amazing. So, I'm looking forward to building him a nice nest egg to help him in a few years' time.
So jump onto Two Blokes Trading. Make sure we buy them courses. we're going to start populating a lot of courses in there now, guys, soon. And like I said, we're going to have everything from analysis to Q&As to trade rooms to everything else in between. So come join Two Blokes Trading if you want to see us guys there, and hopefully we can help you along the process. Thanks, Chris, for joining us today. That was
a pleasure.
Eventful, and I look forward to seeing what happens tomorrow as well.
Yep, I'm definitely looking forward to that.
Thanks a million. Much appreciated.
Good luck, guys.
Cheers.